yeah, I'm sure people will log on as it comes, this, that, and the other. So, um, but yeah, awesome to see everybody. What's going on in everyone's world? I know I've been texting back and forth with Matt and Andrew both a little bit, Rigel too. I mean, I've been kind of talking with everybody that's on our call right now. So, Zane, you want to give us a little update on, I don't know, just anything that's going on with you and where things are?
Yeah, I mean, several different things, but I'll kind of keep it brief. I mean, I've just been working with some members throughout the week. Some of them are not on here right now, but everybody's kind of got some deals in the pipeline. Some people are making their first offers, which
Nice.
is a huge step, of course. Um, and trying to think, another cool thing that I'm working on is building a relationship with my stepbrother, actually, who is like maybe in his mid 30s, and he just transitioned as a residential lender from Regions into just an all-around lender at a much smaller bank that has like $750 million in assets over here in Birmingham. So I went and had beer with him the other day, and I went through and educated him on what seller financing was in the first place and just said, if you could solve this problem for us, since you guys have so much just appetite to do whatever makes sense, if you guys could help us solve this problem of just like finding financing to pair along with the seller financing aspect and that second position mortgage, then I'll introduce you to our whole group and we could start doing deals left and right.
Wow.
So that'll be cool.
So, is he by chance with Robertson Banking Company?
I don't think that's it. I can look and see which bank he's with,
No, it's not.
but
I was just curious. I know another guy.
no, yeah. But I was able to kind of send him over a deal uh, that Dayton Asbestos was working on.
Mhm.
Unfortunately, that deal had a church involved as one of the tenants, and it's just kind of like a little outside of their appetite. But they were totally open to the whole bringing 70% of the purchase price of the deal and having the second position mortgage behind it.
So educate me here. I want to be clear. So you're
Yeah.
telling me that this guy in Birmingham now is you educated him on just the seller financing where $1 million deal, you show up, what's your brother's name?
Max, this is my
Max.
stepbrother. Yeah.
The stepbrother, sorry. So Max, you give me 750 at closing. The seller leaves the 250 in the deal. He doesn't get that money. You educated him on that, and he was like, "We don't care. We're about it."
Yeah, he basically they're so new and small that they're like trying to figure out their way. So like they're trying to get to $1 billion by the end of the year. And he's like, dude, I don't know what we're open to right now. Like I can't tell you yes or no, but it seems like something we would totally entertain. And he's at the point where he's having to go and talk to just like the very top people at the bank about these deals and just kind of run it by them and see what kind of interest they have in it. So they're like super small. I think they have 50 employees total.
Wow. Okay.
What markets are they looking at, did you say?
I asked him the same question. And he's like, I don't know. Just send me deals and I'll tell you like yes or no.
Okay. So not just
So
Birmingham, other states.
yeah, like if you guys like they were interested in the one up in North Carolina that Dayton was working on, but the only problem was just that one of the tenants was a church. Like that was the biggest problem.
Yeah.
Yeah, he didn't show me that deal, and I told him I was like, "It looks like you." I mean, it was a little out of my scope of type of property I would want to buy. But if the guy, I mean, it could be. I mean, that'd be a grand slam. You know.
Yeah. And I mean, if the church had like strong financials, I mean, they had a long time left on the lease and everything, but
Yeah.
it's always still kind of sketchy though.
Yeah, because you got if they move out, how many coffee bars do you have to replace and some tenant improvements and things. You
Yeah.
but all right, well that's encouraging to know. I mean, just another
Yeah.
and what we can do Tuesday, and I'll update we can just update maybe the contact sheet for everybody, and we can just put your stepbrother's name on there and just to have
Yeah.
it on there.
Yeah, I mean, what I would like to do is like if any of you guys are working on a deal and you want to put together a proposal for financing
Nice.
and just outline everything, then I'm gonna just start pointing you guys in his direction and put together the deals with you guys and then to see kind of how their appetite shakes out. And then if we get like a thumbs up on a deal that's right up our alley as a group, then yeah, we could go all in and just use him as a really good partner.
Dude, that's awesome. Way to go, Zane.
Thanks, thanks.
Pat yourself on the back. That's great.
Let's go.
Good deal. All right. What about you, Matt? What are you working on, man? I know you got a lot of irons in the fire right now, man.
Yeah, we're trying to get one of these deals closed. We have an offer to a seller on that one in Michigan. That's the agro company that's a 10 and 7 year lease on it. The owner, I'm not sure if it's going to happen. The owner was going to get. We weren't talking to him directly, but we had a great conversation with the broker that's working with him and knows him well. And the owner was also the former owner of the company itself. But I think he wants a little more cash out of the deal, so I don't think he was in favor of carrying. And I think his current loan probably hits about what we would could replace it with the first position. So he would end up with not very much money. But
I
it
see. So
gave
he's
us
already got debt on it then?
he's got debt
I
and
see.
too much because he put 2 million into some additional buildings. But it led to a good conversation with the two brokers I was chatting with, and it clicked for them. They understood. And it's funny because you talk to these folks and they're like, oh, I haven't heard of that strategy before. I mean, they all know seller carry, but how do you get in a deal with 100% financing? So I, had a good opportunity to really explain that that's our appetite. That's where we look at if we can finance completely. And he's like, his gears were grinding and thinking of the typical, I said typically it's someone that might be a little bit more distressed or an owner operator that's looking to exit, kind of those situations where they're good with kind of leaving some money in the deal and making some money off of it at the same time. So I think that's going to lead to an avenue of being able to have potentially some other deals sent to us from these guys. So upside is that.
Yeah, I think one piece I'm writing this down as you're saying this just because it makes me feel like if they're saying, try obviously the guy had debt on the deal, but I wonder if the question to even if you're not speaking directly with the seller at the time, the question is like how does your client or do you seller are you wanting to get the most money out of this deal? And the obvious answer is like, well, yeah, of course I am. Like that's the reason why I'm selling. I need cash or whatever. Or are you trying to get the most money out of as you can legally out of this deal? Yes. And I think that's where it's like, all right, well, let's just do the math. Does it make more sense to take all this cash now, or again, that guy's circumstances was different with debt on it, but or does it make sense to leave money in the deal? And I feel like if you can preface it out of the gate with just a hey, are you how much are you trying to get out of this? I'm trying to I'm trying to get this number or that number. So you basically tell me you want to get the most money as you possibly can out of this deal. Yes. Okay. Well, let's just look at the math then. Let's just see what the math says. Because most people, I feel like I could be wrong, but they don't take into consider all they're seeing is the bottom number on the HUD statement. They don't consider any other implications because it is invisible until December 31st. Like it's invisible. So it's like presenting that idea that, dude, you are partnered with the government on this deal. Like they think about it, it's like in the back of their mind, but then there's like, it's just kind of out of sight, out of mind. But I think that if we can present them again, and this is something that Zane and I can kind of like, keep refining on the seller finance calculator on our pro formas, just like make it more clear as day. But that almost to me makes like the most sense. It's like if we can just again position as like, dude, you're not considering the Uncle Sam partnership on this deal. So if you go and take all this cash out, you can do that, buddy. Of course, we got partners that can do this too. Yes, that and the other. But we're trying to can help you get. You just told me you want to get the most money out of this. You're not considering Uncle Sam. So if this is another solution to help keep more money in your pocket. So I don't know, just a thought as you were just saying that. So just
Yeah, and that does work for maybe individuals that don't have a lot of other investments where they're not redeploying or
right.
they maybe they're retiring and they just want retirement money. hey, take a paycheck. We'll pay you every month consistently.
That's
You'll
right.
get it on the first, you'll get that cash, right? That's perfect retirement money. Not so much when this guy's investing in different sports, outdoor sports companies, and so he's
It'll
redeploying,
be
right? So
unique.
he's got a
The
solid
seller would
tax
definitely have to
structure.
be retiring or owner user or something
Yeah,
specific like that. But
not so savvy.
a lot of people consider the tax implications until like it's too late, you know?
Right.
I think being a good consultant as a buyer is what helps those seller financing, opportunities, percentage increase. So good deal, man.
Yep.
Hey,
Uh,
Nolan, just a question on that. How do you
Eric?
handle, I guess, folks like when you present that, I mean, when they come back to you and say, okay, but aren't I just delaying it for 5 years? For whatever the term of that loan is, eventually I'm going to have to pay the capital gains. Like, what do you say to that?
I mean, usually what I'll the way that my accountant has told me to say it is you are you're going to be in a, people that are retiring or whatever, isn't that what Dave Ramsey says? Aren't you going to be in a lower tax bracket in the future? And so I always position it that way. Hey, you're more likely than not to be in a lower, that's the whole goal, is to pay less taxes in the future. You're going to be in a lesser tax bracket, therefore being able to to keep more of your money when you actually do get ballooned out of this. And you'll probably say something like, you might not even ever want to get ballooned out of this until later on, because at that point you might just fall in love with the monthly new cash flow coming in your pocket too. So the my accountant always just said, everyone's trying to reduce their, taxes down as much as they can into the future. And if you're in the lowest tax bracket in the future, you'll be able to keep more of that pot of that money in your pocket when you do balloon them out.
Okay.
Yeah. Andrew, what's going on with you, man? How are things up in your neck of the woods?
What's going on, man? I've been just working with brokers all over the place, reaching out, introducing myself, looking at deals that they have currently, kind of asking questions. I may have two potential to go look at if I ever get back in town. So I've kind of been back and forth with that. In the meantime, man, I've just been just reading up. I finished the book, Commercial Real Estate Investing, yesterday.
Nice.
It's a great book if anyone hasn't read it yet, and there's a lot of similarities to what Nolan's put together and how his program's kind of set up that I kind of drew out of that book. So it was easy to follow along with and understand. But that's kind of where I'm at. I don't have any offers currently. I've made several, had good conversations with the brokers, and just hadn't really been able to get past that next hurdle. But still working on it, still trying to network, um, and keep those contacts. So, hopefully they'll start sending me deals. I actually did have one broker out of Huntsville. She sent me one off market that we're kind of going back and forth on now. I just got to schedule some time to go up there and look at it. So
We'll make that work, man. That's awesome. And I'll say that on the book, the with Dolph, I mean, it's kind of funny, but like a lot of the stuff and that's one that he wrote, obviously, but then another one that he wrote too is called Real Estate Riches. And that was one that I like kind of first like stumbled on that guy. And but the commercial real estate, like a lot of the stuff that he has in there, I've kind of ripped it off and put my own twist on it. I'm like, not that Dolph is better or worse than what we're doing, but I think that like the more detailed in the relationships and all that kind of stuff that we've kind of created, Dolph was kind of the precursor of like, because he's talking about in that book, he's talking about like running ads in like newspapers and stuff like that, So it's just a little more dated than what we're doing
dated,
now, but he's got the fundamentals down, like even like the math of buying property, like the deal that he did where he bought a piece of property and then he knew the value of it because there was a billboard that was stopping a scene into the water from, it was just he's just really creative like that. So I try to do creative things like like him, which is cool. So
yeah.
um but right on, dude. That's awesome. Rigel, what's up with you, man? How are you today?
What's up? How are you guys? I was gonna say I'm about halfway through the CRE investing book. So I just read that example a couple of days
Oh,
ago
with the
about the
billboard.
billboard space. Yeah, yeah, yeah.
I was like, I
So
read it. I
fresh
was
in my
like,
mind.
dude, that was rad. Like, He
Hmm.
I forget exactly the details of it, but that one stood out. I was like that. How he came up with that was like
I think
took.
it was like a hotel that was right next to it, and so if they put up this billboard, it would block the view of the hotel, something like that. And so they're paying them to like not make the billboard taller, something along
Yeah,
those lines.
it was crazy unique where yeah, the cash flow of the billboard was cool, but he ended up making like more money from the hotel because they didn't want to take him down or whatever it was, or make it
Hmm.
tall.
I think and it was a lot. It was like 20 or 40,000 a month or something, and just like free cash flow from doing nothing.
That's
So
wild.
that was kind of
Yeah,
a cool
good for him.
example. But
Yeah.
yeah, I was crazy busy the last couple of weeks. My parents just retired, so I'm helping them move. So that's why I haven't been able to join calls. But I've been going to networking events like all across Los Angeles, from like literally from Compton to Beverly Hills. I've been to different events, and I've been talking, about our criteria and eight caps, and like maybe not getting laughed out of the room, but eight caps are not really a thing very much in California unless you're unless you're buying like a cannabis type of deal. Um, and so I think 2 weeks ago, Nolan, you suggested I look at vacant buildings and we try and place tenants and work to a higher cap rate that way. And in my first broker that I really emphasized that with, he sent me like 70 deals yesterday.
Wow.
So that was pretty awesome. I had a buddy from my freshman year of college, like 4 years ago. I had one class with him, and he's now a multifamily broker. And I just saw him post on Instagram a building. I said, "Hey, do you know any industrial brokers?" And he said, "Rigel, I'm a Jewish Arab in Los Angeles. Of course, I know brokers." So he said he had a guy for me. He had a big shot and then a guy in his 30s, and he actually introduced me to the big shot first. I think he liked my story, and so yeah, I got like 60 deals in LA County and the surrounding, and then I got 10 off-market deals. So I just went through those today. I'm gonna walk three of those buildings next week. But the on-market deals were like 6 million to 52 million, but six was his smallest deal. So I think the off-market ones, there's a couple smaller deals, but it looks promising so far. So that was cool because I really just had no traction with any brokers. Like I'd meet them in person and they just wouldn't respond to my emails at all. So that was really nice. And there's one building in LA County in a huge industrial area that it looks exactly like one of your buildings, like size wise. It's like 40,000 square feet split into two tenants. So that's the one I think is most promising. So I think I'll also meet that younger broker next week and see if I can find a couple more smaller deals as well.
Dude, that's awesome. You're playing the game. It's kind of like you fired me up with your text the other day, just like say it's all kind of coming. It's nothing's happened yet, but you're like, okay, I'm starting to actually get some traction on my tires and starting to really move the ball down the field, man. It's like, you know, it's like you like I've said it before, but when we were playing college baseball, it's like you don't have to have every team like you. You just have to have one draft you, and it's almost the same thing with like this broker and your all these other guys are like, oh, go kick rocks and won't return your call. But one guy comes back and says, wait a minute, that's a good idea. And it probably gave you even more rapport because you were talking about the strategy of purchasing these vacant spaces and then leasing them up at, and then which increases the value of the site. And then he's probably like, well,
Yeah.
shit, this is awesome. I can, work in tandem with this guy. We can buy these buildings. I can get a commission on the front end. Then I can lease a space up, or he's got a guy in his office can lease a space up. Then you earn a commission on the back end, and then you're able to refinance the equity or sell it at a six cap. So the opportunity
Hmm.
is there, man. So that's awesome, dude. Congrats on that
Can
success. That's great.
can I
Yeah,
chime in?
absolutely. Thank you.
Uh,
Yeah.
if I can chime in, hey Rigel, I think I saw you on a meeting prior. I'm up in Santa Clarita, so we're practically
Oh,
neighbors
nice. Okay.
where you actually are. So we should actually get together, meet up, get some coffee, and see how we can help each other out. Um,
Yeah, absolutely. I live just right by USC, so
okay,
I'll get
yeah,
your phone number down and I'll shoot you a text. If
yeah,
the
it's
phone
right
number
there.
on the screen is that your correct one?
That's I
Perfect.
hope so. Yeah, yeah, for sure.
All right. I know
And then
some people have like Zoom phone numbers, so I wasn't clear.
yeah, true, true. Um, The other question was, Nolan, do you mind just a brief reiteration of what you recommended to Rigel in terms of the strategy with going for vacant?
Yeah, what Rigel had texted me, this is a couple of weeks ago, was just like, I'm having trouble finding deals that.
Oh, gotcha. Yeah.
Hey Zach, can you close your mic for a second? Whatever, thanks. Basically, Rigel was saying like I just have trouble finding the deals that's fitting into our criteria, and I'm like, it's not uncommon. It's it's part of playing the game. Like, stay in it. That kind of that kind of like rah rah out of the gate. He's like, dude, I'm in California. It's the same thing. That's why I said maybe we should consider looking at those as at vacant warehouses where they're not actually producing any cash flow, but then you can use the vacant, the vacant part of our pro forma to make offers on those sites because you know what the value of the building is, especially if they're a six
You
caps.
change it. And,
Hey Zach,
yeah.
hey Zachary, would you mind
You can just mute him, Nolan.
I mute him? Oh,
Yeah.
oh, I guess I didn't realize that. That's me
No, you're
being
good.
4 years old, I guess, not knowing. Um, because I had trouble thinking. Sorry. But I'm saying basically it was like if you can find a way, I said if you can find a way to go out and find a vacant site that fits into the criteria that we're chasing, that doesn't have the cash flow that we're talking about, right? You can make that offer based on the vacant calculator. And
Yeah,
that seller, whoever it is, think about it for a sec. Those guys that are selling that building, or if it's even if it's not for sale or whatever, if it's vacant, it is costing them money every single day. I mean, they got to insure it and they got to pay property taxes. So you can relieve them of maybe an expense that they have and they know, and they might not be real estate people. Otherwise, they're probably not, because otherwise they would be leasing it up and selling it at six cap, right? So they probably don't know what they actually own. It might even have been in some trust, or somebody inherited it and they don't have any desire or want to do with the property. So being able to say, look, I know the value of the building when I lease it up is worth a six cap in California. I'm going to go and buy this thing vacant, make them a vacant offer based on what the actual repair value is and the actual intrinsic value. And then you just work your way down and make your offer. You never know what they're going to say. It's a little bit higher, quote unquote, risk because you are not buying something with any cash flow, but the opportunity to get a really nice, I mean, triple or even home run on a deal like that can be impactful, like financially. So that's kind of what that's what I recommended. It looks like it's paying off, dude. So congrats. That's awesome.
Thank you. Yeah, yeah. I would just add, I think, why would this broker in his 50s that has, many multi-million dollar deals, if not, tens of millions of dollars of deals, like why would he even really respond to my email? I think it's because other investors don't really want to buy vacant buildings, right? Like who wants to buy a building without cash flow? That's a very small percentage of investors. And so I think our approach of, hey, we'll place a tenant, we'll almost double the value of the building for the seller. If the building's just sitting vacant, as Nolan said, they're paying all these costs on it. In California, if that's like a $5-10 million building, that's a lot of monthly costs. And so I think on the West Coast or just really mature markets, that vacant to leasing the building for them and signing that lease on close strategy is like it's the only thing I've had so far that brokers have responded positively to.
And to be and we'll finish up on this note, but on top of that too, it sounds like when you made that offer on that strategy, it immediately elevated your sophistication to those brokers. I'll be willing to bet. I bet you they were just like, damn,
Oh,
that's
absolutely.
super
I
smart.
mean,
That guy knows what he's doing.
I put my criteria together and like I think 2 hours later he sent me 10 off-market deals that fit our criteria pretty well. So three of
Wow.
them I think really checked out.
Dude, that's awesome. That sounds like a good, even though you've been not on the call, it sounds like it's been a good couple of weeks. Congrats on that. That's great.
Absolutely.
Yeah,
Thank you.
awesome. Eric, what's going on with you, man? I want to get to everybody here before we get into anything else. But what's happening in your world, man?
Things are pretty busy. I actually have three properties under contract right now. Moving along. One's should be closing in the next couple of weeks, but yeah, it's taken a long time to get here, but they're finally starting to pop. Um, yeah, so all good stuff.
Good deal. Congrats. That's awesome. Sounds like
Oh,
things are
thanks.
on the way.
Yeah, I was hoping for one at a time, but whatever. I guess I'm having triplets.
Hey, that's a lot of bonus depreciation, it sounds like.
Exactly. Yeah, yeah. I'm really hoping for that. Actually, that's a perfect segue because I had a question for you. I did some initial estimates from some, I think I used CSSI to try and get some estimates for that, and they're like at 15% of building value, which is crazy low. You know, we shoot for 30. I know I was talking with Zane. He gave me, I think it was Eric Oliver, and I reached out to his company. I got a
Okay.
meeting with them tomorrow. Any others that you recommend? Are you typically seeing 30%? Is that where you see?
I think I mentioned this on a call or maybe in the past. So how I've done it is I'm more of a rambler, more of like a cowboy when it comes to doing the cost segregation. I've only done one cost segregation study, and it was when I bought my first property. And then I went and did my, with my accountant all my taxes. And he's like, you really don't need to do that. And I'm like, well, that's what he said in tax-free wealth, and that's what I've learned, he's like, I'm telling you, I've I've done 1,000 of these. I've done over 1,000 of these of with other people that have, and I pretty much know based on the size of the building and based on how much you bought it for, what it's going to come out to be. I'm like, all right, let's do it your way. So you go, that's where I came up with the 25 to 30% number. And 30% being if you want to crank it up to 10, you want to get aggressive. He goes, the thing is if you were to ever be audited, because it's happened in the past, if you were to be audited, very simply, his projection is going to be almost spot on. He goes, but if you were to be audited in the one-off shot, they would ask you to go actually do a cost segregation study. It's going to probably match what your accountant said it was going to be. And if there is any, differentiation of it, then you either tinker it up or you tinker it down. But then you pay for it though. You pay
Yeah,
for
yeah.
the segregation study.
Oh, I love that. I hope that's
Yeah.
the case
It'll
because
save
yeah, I
you
mean,
4 grand. It'll save you like 4 or 5 thousand bucks.
at least I mean they're more than that. I mean, of
You
course they're
know?
getting plus they're like super conservative. The modeling ones like CSSI, they just do it through the computer. They're not engineering based. They're like 15%. It's just super conservative. They'd rather not get audited than save you money.
No, man.
Um,
That's not, and I think that's where it comes down to having like the right guys on your team, like the right accountant, the right strategist or whatever. But that's what my accountant said. He's like, look, don't do that. He's like, don't buy those because if you were in the one-off shot that you were to ever be audited, he's like, first of all, I'll go to bat for you for anything that you're doing. He's like, we follow everything that you're doing. Every single quarter we go over stuff. He's like, but I've seen enough of them where I know what the number's going to be. And
yeah,
so you might as well not pay for it. And if you do have to actually pay for it, well, then it's going to be accurate and you might have to pay, or they might owe you, $100, but
yeah.
it's within like $100.
Oh, I love that. You just made
So
my day.
yes, it would
That's cool.
save you. Like, just don't do it. Like,
Yeah,
that's not my accounting advice or whatever you call it. That's my disclaimer.
I'm
But
recording.
my accountant would say, he'd be like, don't do it. Just shoot for 30% or 25% or whatever it is. And if something does come back, well, then you actually will they'll just ask you to do it. That's all they'll do.
All right.
You don't even get a slap on the wrist. They're like, hey, well, actually, what was the number? Go do the actual segregation study and tell us what it was.
And that's what you do for all yours, right? So, all right.
Literally.
Perfect.
I only
Well,
did one of them, and he's like, don't do that again.
all right. I
So,
like that
And
answer.
yeah.
another
Hey,
good thing to note is that that same accountant will be at the live event on
Yeah,
in
he will.
November. Is that right, Nolan?
Yep, Clay will be
So
there.
you guys can ask him all the questions you want there. You just raise your hand and ask.
All
Yeah,
right. Perfect.
Clay will go over. I'm sure he'll even tell that story that when I was in his office about that. But he'll go over the bonus depreciation. He'll go over real estate professional status. He'll go over what you can deduct. He'll go over the ins and the outs of how you're underwriting property, if it makes sense to, again, how much depreciation, what his forecasts are for taxes. Like he'll go over everything and all of that stuff.
Yeah, it was awesome last year.
hey,
Yeah,
Nolan,
just
I have a
one last
question
follow-up
on.
question. I noticed
Oh,
on
go ahead.
the closing statement on your pro forma, you don't have Alta surveys. Do you typically not do those, or what's your take on all the surveys?
I'll do an Alta survey if my bank requires it or they ask for it.
All right, so other than that, you won't do it. Okay.
Yeah, if my lender's asking for it, well then I mean they'll wrap it into the mortgage. But because when I was developing a piece of property which never ended up coming to be, I had to get an Alta survey and just just because that was the way you can develop it, get the topography and all that kind of stuff on it. But unless your bank is asking for it, I don't think it's worth spending another $5,000. That's what I paid for it, and I didn't even use it. I actually gave it to I gave it to the guy that bought the property after me. I was like, here, you can have it.
Yeah,
Uh,
because the only downside is your title commitment will have exceptions around boundary lines and easements and stuff, and without one kind of a thing. So
sure.
you're okay with that, I guess.
Yeah, I mean, if my bank, again, I look at it, it thinks if my bank is comfortable with the title search and the title policy, then and they don't need Alta survey, then they're happy with it.
All right,
Yeah,
cool.
yeah, good questions.
Hey, Nolan, I had one more question about bonus depreciation.
Yeah,
So California is a state that doesn't conform to federal bonus depreciation. I think Michigan is the same. Have you bought buildings in states like that? Are you able to take bonus depreciation on like your state Alabama taxes, but not federal, or how does that work?
it should not affect depending upon what state you're in. It should, I mean, the bonus depreciation deduction, if you're a real estate professional. So just to be clear, so here,
Mhm.
let me see if I can pull this up here real quick so you guys can see what I'm talking about. I want to get to where is it? It's, damn it, I don't know if I have it on here. Well, it's not on there. But basically, you've got three buckets of income. So, like, you have three buckets of income, and you've got active income, trading your time for money, you know, portfolio income, buy low, sell high, and then passive income, right? Which is rental real estate. And you cannot intertwine these three buckets. So if you earn, an active income, you can't take passive losses against active income. You can only take active losses against active income, or portfolio or passive income versus passive losses. So the real estate professional status, again, allows you to, you or your spouse, we've talked about it. Clay will also, again, go over all the details of that, how you can qualify, particular unique questions and like answers to your situation. But when you become a real estate professional, and you buy a building, you take bonus depreciation. Again, $1 million building, you now have $250,000 of bonus depreciation. If you weren't a real estate professional, that is a passive loss. You can only take it against your passive income. But when you become a real estate professional, you then become that passive loss switches buckets to become active losses. So it
Yeah,
does.
yeah, I got that part, but what state that building is in
It
does
should
not
not
affect
affect
that.
the state. It should not affect. It doesn't.
Okay,
It's just your income. You pay,
okay,
you earn this amount of income, and then you pay tax federally in the state, right? That, or I guess state in federal taxes on top of that. But whatever amount that you earn, this depreciation deducts against whatever you grossly earned. It should not affect anything against your federal or state, depending upon where the building is. I've never.
okay,
I've never heard that. Or again, I'm not an accountant. That's just what Clay would say. Is it should have no
okay,
impact on the passive or now active loss should have no impact on which state you own the property. Otherwise, people wouldn't invest if it wouldn't benefit them. They couldn't use the
hmm
incentive.
okay.
So
Thank you.
yeah. Okay, I see David on here. What's up, David? How are
Hey
you, man?
man, just getting back at it. Had a little time off, and
Yeah.
me and Matt have connected quite a bit, review, trying to do some deals, but haven't been super active lately. But I'm getting back at it.
Yeah. No, glad to hear you're back on, man. If anything else, like I mean, are you when you and Matt are looking at deals, are they in like the Dallas area? Are they out in California? Like, where are you guys just kind of shopping around?
No, we the one we talked about today was in Texas. A
Okay,
couple of them here in Texas. I know he does this full time, so I think he's pretty active. But I don't target a certain state. It's wherever one pops up or looks good, falls into the criteria on your sheet and stuff like that. So
nice. Good deal. Yeah, want to make
yeah.
sure that we're anything we can do for you, holler at us, man. We're on standby.
Yep.
Great.
Thank you.
Yeah, man. Rhett Davis, what's up, man? How you doing? Is Rhett on here? There he is.
Hey, Nolan.
Hey,
Hey,
Rhett.
doing well.
Good, man.
Yeah,
Got
doing
anything
well. Yeah,
cooking
it's
right
great
now?
hearing. Yeah, it's great hearing all the activity and just trying to get now back in myself and calling in and get back re-engaged and start, getting something going here. So similar.
You
Well,
got
here's
working in the pipeline, or what was it, Zane?
I was gonna offer something to like Red or David or whoever really wants it, but Adam Morris was generous enough to kind of reach out to Nolan and I and just say like, he just bought his first deal very recently, and he was like, "Hey, I want to start giving back to the group, start working with whoever wants help, like getting re-sparked or kind of getting back on the train, or if you guys ever need help with like financing or raising money from investors or putting together deals, you can always reach out to him, and I can like share his number on school or whatever, and use him as another resource and a way to kind of." Hop back on the 8 week plan or whatever you want to do to kind of get the ball rolling again. So I think you guys should maybe use him if you want.
Oh
Yeah,
yeah, that sounds great.
yeah,
Yeah, that would help.
I'd
Definitely.
agree with that. I mean, he just closed the deal. He'd been in, corporate finance and everything, so he knows how to, the capital stack and all that kind of stuff. He's really into that. And so, again, if anybody would like to have even extra, quote unquote, tutoring, if you want to call it that, he's wide open to helping and partnering and again kind of tutoring anybody that's wanting it because he's feisty, he's fired up, he's like looking at more deals, he's like he finally got one across the finish line, he's like wow, this actually does work. Okay, how do I go do the next one? Now he's got some momentum, which I think that's what we're all chasing. You get the one or the second one, then you got some momentum going, and then it just like starts to really snowball from there. So that's an opportunity. So Zane, if you don't mind putting that down, we'll introduce Adam just as like kind of our tutoring expert.
Yeah, like another support resource.
There we go, support resource, perfect. Zach, what's going on over there? Zachary Simpson, what's up, man?
How's it going, guys? I've been listening to the background as we just finished up a few things, but no, been checking in. Had uh, actually been well, had a limited partnership kind of deal that we finished up, but wanted to have been kind of pursuing some more uh, direct to seller marketing campaigns. So just some letters and things to reach out directly. Some of them actually in Birmingham, some in Charleston, South Carolina, and then a few over in Denver. So um, pull together some information and should be sending that out. I believe early next week. So uh, no no pressing leads currently, but good to hear everybody's feedback and what they're getting into. And as soon as I get something that's a little more detailed, definitely want to share and get feedback from the group.
Awesome, dude. Well, again, it's like I said, just keep staying in it. What they say, chop wood, carry water. Just staying in like that. So that's awesome. Well, I'm glad we're all. I mean, there's a lot of positives moving right now, which is great. We got about 20 minutes or so left, and we can open it up for some dialogue and questions. Well, before that, I wanted to put Matt back on the spot for a second. Matt had a really good call with another one of our members, Greg DeLessio, the other day on just another passive cash flow opportunity for all of us. Matt, do you mind sharing that? I mean, Greg touched on it a couple of weeks ago, maybe a month ago, but I think it's another just a cool opportunity what they're doing, and it's just passive income, and it's doesn't, and it's. I mean, I'm working on it too, but I think it's just another thought. What was your opinion, Matt?
Yeah, I had to
Again, not
rack
trying to
my
put you on the spot. It
brain.
had to be good or bad. I just was curious what your opinion was.
You don't send him the recordings, right? Yeah. I'm
I
joking.
did not.
He's a good guy. I jumped in the meeting the previous week late, and so I kind of got like the rundown of you make serious cash flow. So, I was like, okay, well, I got to find out about this.
Yeah.
And so basically it's essentially supplemental health care backed by um by tax advantages. So in reality, the employer and employee, even when they sign up for this additional health insurance, they're able to get more on their paycheck than they would have. So that's my dumb down. I still haven't fully educated or created my own elevator pitch on it, but I was interested enough to add it to the list of things I'm studying. And, as I have conversations with people and think about different companies that I know or have worked for, where that's an opportunity to say, hey, no pressure here, but you know, how'd you like to save money on your health insurance? Here's the link to talk to Greg, and then it goes from there. So all you're doing is referring. If they sign up and they're above 25 employees and above $10 an hour, then they're eligible, and then it becomes cash flow. Now, of course, Greg throws the larger companies that, if you have 1,000 employees and they sign up, now you're driving a Ferrari. Just kidding, he didn't say that, but it's really great money. So there is potential there, and for me, I didn't feel like it would hurt to just add that to supplemental cash flow opportunities. One other thing I'll say is that you do have to be licensed. So there is a state test you would have to take. Of the licenses, it sounds like it's fairly straightforward, not the hardest one of the types of licenses. It's the health insurance something. So that's all I know at this point. He threw a bunch of info my way, and I'm just going to read up on it. And, hopefully it's, it looks like there's some pretty good clientele that are using it. So it's not like, it's a pyramid scheme or something.
Right. I just thought it was interesting, like the way I understood it. And again, it's basically if you run with some business owners that have a decent amount of employees, you refer him, say, hey, you want to save some money on your payroll taxes, and your employees can keep a couple extra bucks in their pocket every month. You're going to do it anyway. This might be a better way to do it. And so that's what I understood it. And then you don't have to do any selling. It's kind of a referral, a referral commission essentially. And I was like, I'm intrigued. I'll just say I'm intrigued enough, right? Because if we all run with some guys that we know that are somebody somehow, and I'm like, I can just again throw it out there, and I'm not even looking for anything in return. But I was like, why not just give the opportunity to everybody in the group? They can get on with Greg if they want to get more information. If they don't, then whatever. Tell them to kick rocks. Like, who cares? But it just wanted to offer another passive stream of cash flow to people that if it's something that they have any interest in. So there's that.
Was he on last week, you said?
It was probably 3 weeks ago that Greg kind of maybe it might have been.
Yeah, last week it was last week when
last week.
When he came on and talked about it. So
Okay.
I'm not sure if that recording's out yet or not. I don't know.
Oh, I probably need to upload it then. It's literally probably on my desktop right now. Sorry. I'll upload both of these calls today to school. But
Yeah, I've heard of these type of programs. So I'll definitely take a look at it.
They just sponsored like Alabama, like the football team has become sponsored by
Yeah.
Auburn has. So it's like it's kind of getting some momentum, I guess. It benefits them. It benefits these companies. So I was like, he goes, if you refer it, you get a commission. And I'm thinking, okay, well, that's pretty passive, to me. So who's not opposed to that? So I just was like, let me just share this with everybody in the group. They can take it and run with it or not. Who cares? But you might as well just get your eyes on it, study it, like what Matt said, and see if it makes sense for you. Whatever. So thought there.
Yeah.
I could add to that, I guess, another
Yeah.
passive cash flow opportunity I've been pursuing recently. I don't know if any of you guys are in the world of small business acquisition or just business acquisition in general, but I've been working on a deal for a lock manufacturing business down in San Diego. And I already have an investor for the whole purchase price on that deal, but I don't know if that'd be something anyone else would be interested in. Generally, we're using like SBA loans, but you're still needing to bring 10 to 20% down, mostly in like recession resistant industries. If anyone who would have appetite for investing in something like that.
That sounds awesome too. I mean, that's one thing that we can all just post on school is just
Hmm.
opportunities. I kind of look at the collective as just an opportunity club, right? I mean, obviously we're chasing a certain demographic of property, but if we can also, you're doing something that's killing it. I know everybody else in the group would also want to participate in that. So I think it'd be great just to, pop that on school on the forum. And if somebody else wants to reach out and ask questions and see if there's an opportunity or fit in their city or whatever, then bring it on. The tide raises all ships. So I think that'd be cool.
Yeah, absolutely.
So cool.
Did he have a slide deck on all that stuff, or is it he just talked about it on the recording and then you just reach out to him?
I don't think he had a slide deck, but I know I've got one. I've got some stuff like.
He sent a bunch of material.
Yeah, I got a bunch of material on my desk, like right here, of like
Hmm.
and everything, and it's pretty cool. I mean, I don't have payroll taxes, but for somebody that does, one of my tenants, I sent it to one of my tenants who has, he's got stuff in 22 states. I'm like, dude, you might be able to save some money on this. I go, don't listen to me. I'm not the expert, but you should maybe talk to these guys and maybe you'll put more money in your pocket. It's like preventative healthcare versus reactive healthcare, I guess. So, but yeah, I mean, I'll upload that so you can like listen to it, David. But I thought it was, I mean, I'm intrigued. I'll say this: I'm intrigued enough to, I'm intrigued, and I want to, and I'm studying it more.
Explore further.
I'm
Yeah.
definitely, yeah, I'm not just being like Greg kick rocks. I'm thinking there is something here. And that's why I'm like, I'm kind of shopping it a little bit right now, studying in it. So just a thought. You know, I'll put all this stuff up on school and stuff so I'll have access to it. So anything else? What else is everybody working on? I want to make sure I answer all our questions before the end of our call here. Or other stories or thoughts that we gotta for our for we've got everything pretty much dialed in for the live event. We've got the location. We've got the we're gonna do another property tour. We've got the bus dialed in. We got the lunches, and my tenant already has agreed to for those that were there last year. We'll go maybe sit in his office and have some lunches and drink a couple of beers. Like so everybody it should be a really a good time again. But if you can make it, we'd love to have you. But any other thoughts, questions, opinions, ideas? Cool.
I have one more addition real
Yeah,
quick that people might find valuable. I don't really know, to be honest, but I just sent this over to Rigel earlier and a couple other members of the group, and it's just something super simple. And Nolan, if you want to give me permission to share my screen here.
absolutely.
Okay, so it's just kind of like a little flyer. I think we talked about this on a live call recently, and it just shows kind of what the CRE collective is, shows exactly what we're looking for. The resources include, 5 million plus in private investment, 20 million plus in bank funding. Just a way to kind of give a little bit more, what's the word, credibility to like who you are, and then just kind of your contact information down here. So this may be useful or maybe useless, I don't know. But if you want your own little flyer here, just let me know, and I can change the name down here and the number and send it to you as a PDF. But that's all.
I think it's valuable, man. I mean, again, it just gives more clout. It gives you, I mean, just another leg to stand on, I think, But yeah, I think that's a good piece too. Or if you really like Zay, maybe put that just on the forum and say, hey, insert your name here. If you like, they can reach out and you can just make it for them.
Yeah.
So
I
cool.
guess I had one more question before we head out of here. I think Zane was telling me about a couple of weeks ago, like the biggest deal that the collective had been part of so far. I can't remember the exact dollar amount, but it was in the like 20 plus million or something. And I was just wondering if that was like still under contract, or when I'm kind of talking with brokers about the size of our deal appetite, what kind of range should I be talking in?
Yeah, I would keep it in the $1 to $5 million range. I mean, those deals are like way outside of our metrics as far as just like, especially Nolan himself. But yeah, we'll keep it in the $1 to $5 million range just to keep things simple. And like those are the types of tenants that we're looking for specifically with that $2 to $10 million revenue range
Right.
as well. Once you start getting bigger than that, it starts getting like different businesses
Yeah,
that would be much harder
anything
to.
bigger than that, I was looking more at like multi-tenanted spaces. So that way we could keep each tenant in that $2 to $10 million range. But I was looking at some buildings that maybe had like three spaces with, tenants kind of each that size. I guess also just in California, I'm usually looking at like $300 to $400 a square foot. So pretty different than like, rural Alabama, where I think what mostly you're at like 100, $150 a square foot on like a higher end.
I mean, I can get them less than that, but I mean, we just got Google down here. We got like these lights in our offices now. I mean, it's great. All
But
these
okay, thank you,
apartments
Zane,
down
for that
here in South
information.
Alabama. Yeah. Now, I would say this that the big deal that you're referring to, that's a deal that Parker and a couple other guys are working on. My brother Parker is working on, and he just had a baby yesterday, which is really cool, or maybe 2 days ago. So he's really excited, and he's been maybe out of commission and focused on other things, which is great. So they're working on another member, Courtney. She's like considering funding it. So there's they're working on it. I don't know what the update is on that deal. So I can't really tell you but what Zane said is exactly accurate. If they want, if y'all want to go do that, y'all want to partner up and go for it. I say go for it. I don't want to hold anybody back or ever discourage somebody from trying to make it happen. I just personally, I've done deals in the past that fit outside of my metrics, and they tend to be somehow a headache in my life, and not, but also that's not fair to say it wouldn't be perfect for what you're looking for, right? So. I'm not telling anybody what to do. If you want to go for it, go for it. I just don't think for me and where I am personally, I don't know if I have the appetite to participate in a deal that fits outside of those physical attributes, if that's fair to say.
Gotcha, absolutely.
Cool. Awesome. All right, everyone. Well, thanks for making it today. Man, this has been a great call. I appreciate everyone being on and just being open-minded and transparent about where they're at. You need something from us, do not hesitate ever to get with us. You know our numbers. I mean, just holler at us. We'll do anything that we can for you, as you know. And I'll record this one, or I'll upload this one and the one from last week to school here once we get off here. So I apologize for not putting it up there. I've been my wife, we had not a scare, obviously, but just going, she thought she was going into labor. We're about to have a baby too. So it was like, that's not an excuse for us to not upload this, but my priority has somehow, my mind's been somewhere else the past couple of days too. So, but appreciate the prayers if you are into that for my wife, that she's about to have another baby in like a week. And yeah, I'm be a dad of three, and it's like, holy shit, here we go. But the show goes on. So
Welcome
thanks
to
for
the club.
yeah,
Outnumbered, finally outnumbered, baby.
finally outnumbered. That's
Zone
it. Right.
defense. Zone defense.
That's it. Zone defense. That's it. So thanks everybody for making it. Really appreciate you guys. We'll go from here. Okay. Thanks.
Thank
Appreciate it.
you.
Thank you. Congratulations.